Hi guys, this is Ray again, and in this video we're going to be doing a second video walkthrough. The first one was on CELH, so if you missed that you could go to the dashboards and grab that one. So in this one we're going to be covering SQ, a few different topics, a few different things that I see on the charts that I really want to point out to you guys. So for SQ, one of the first concepts that I wanted to cover was what irrational price action looks like and what rational price action looks like. So by irrational, I mean, emotions on the charts versus institutional action on the charts. So this particular action here, if we see, basically when the market's in a trend, stocks act in a tight formation with tight closes, and the action is within, it's not, irrational action where it's, it's holding KMAs, and the close from one close to the next close is fairly tight, and the action is fairly consistent. What emotions look like on the charts is something like that we saw here. So when the markets go in a correction, there is emotion that shows on the charts itself. So the close on this particular day and the open on the next day, we don't really know. I mean, this is emotion on the chart. So from Feb 24 to about, April 6 or April 3, we saw emotions on the charts as the market corrected and reacted to external factors that are out of our control. So that's sort of the key concept. So when you're doing technical analysis, basically what you're looking at is, is this action within the confines of an uptrending market, which it was here, and it's fairly, tight action, good closes, and well within the means of an uptrend. Whereas when the market's pulling back and we're into a correction, we see irrational, price action and emotion. So this sort of range, when we get into a correction here, you don't want to be the one, putting up your hand and saying, I'm going to be building a base here, or I'm going to buy a stock here and hope for the best, or whatever the case might be. What we're looking for on the charts is rational price action that is tight on the charts. It's good, it has the characteristics that we look for, and the market, most importantly, the market is in a uptrend itself. So anything that we do at TL these days is, if the market goes into correction, we sort of step off the gas, let the institutions do what they need to do to get us out of a correction. We as retail traders, we can't be the ones to say that we're going to be putting our hands up and be the ones that build the basis. So again, just to highlight this is rational, tight closes, good price action in an uptrending market. When the market goes into correction, there's no need to be getting involved in this sort of action. And this is, not only does it hurt your progress, but it also hurts your psyche. So if you were to position somewhere over here and the price opens here next day, this is not within the confines of your system. So the stock's below 200, and if you're trying to, pick a bottom so that you could look good at about this point, that really isn't, the point here. The point is to have discipline, to have habits, and to exercise strict discipline, especially when the market is in a correction. So the second topic that I wanted to cover here is basically once we see the market go into corrections, how do you go about saying that, there might be a chance that institutions have started to step in? So we see wide ranges and loose action in this area, but then the sort of that first tight range is this area here, but then price breaks down again, and then sort of there's still some sort of emotion on the charts, and then price really gets tight here, where it's now, this is a character change where the stock moved down, gap down, corrective market, and was acting irrationally, but now it's sort of, it looks like institutions have stepped in that there's some sort of rational, tight price action on the charts that's sort of tradable without the emotions removed from it. So at this point, I mean, in the case of SQ, one of the things that is key is this particular chart. Ross and I have been trading ever since its IPO, so we're very familiar with what the company does. It's an institutional darling, where it's been a winner in prior cycles, and if the market is to go into an uptrend, it's going to be a winner again. So I want to flip to MarketSmith real quick just to show you a few things. So the Feb correction from Feb 24 area to about the April 3rd area, and what we see here is, that's our Feb to March action. But if you look at it, this has been a top-notch stock with good earnings, and really just laddered up the 10-week line in a prior cycle. So when the market was uptrending in this cycle, this was one of the best performers, along with PayPal in this space. So familiarity with the name itself and how it's trading in prior cycles will keep a stock like SQ always on your radar. So you always, there are going to be, your SQ, Amazons, Apples, CMGs, and whatever the stock that are important to market structure. They will always trend or outperform the markets when a market is in a good uptrend. The other thing you get when a stock makes it to the top 10, which I'll cover shortly here on, how it made the top 10 and why it makes the top 10. So one of the first things that Ross is looking at is increasing fund ownership. So it's always had increasing fund ownership. So we were at about 1,000 in March 2019 to now about 1,600. So the stock's always had increasing fund ownership, and it's also quality fund ownership. So these are the mutual funds that IBD maintains. So if something shows up on this side, these are quality funds that IBD really likes, and they own the stock as well. So from a fundamental point of view, this is a strong stock. The second thing is it has a history of earnings and sales associated with it. So from a fundamental point of view, when a stock makes a top 10 report, it's in most cases, it's a solid one. And in this particular case, Ross and I already know the story. We've traded it in this uptrend, this prior uptrend where it outperformed the markets all the way. So now flipping back to here. So this is basically the first tight area or rational action we see after the emotional price action. Again, you don't want to be playing hero ball in a correction. You have to wait for the follow through day. We get our follow through day somewhere over here. And at that point, this is not really one of the first stocks that we are looking to position in, mostly because it's still, in a way, underperforming relative to how it was performing before. So this is not one of the first ones. So we're still looking for more evidence at this point. In this particular zone here that I've labeled, the market, again, is going down, and then SQ is outperforming the markets. So those are your RS days. So when we see RS days, that's institutions stepping in and stepping up to support price when market is seeing turbulence. That's exactly what you want to see. So that's sort of the first evidence after this tight area that the market is, now the stock itself is above the 200-day, the 21 DMA, which is this little baby blue here, is sort of, starting to trend upwards. We see tight areas and non-emotional action on the charts. We see RS days. And now at this point, the stock is really on my radar and also Ross's radar. What happens next? It makes it to the top 10 report basically at its prior high, which is the traditional entry area. And the traditional entry areas, basically this 87.25, right? But right before that 87.25, what we see is some sort of dry up in volume and tightness in its price action. So this is constructive. It's a constructive tight area, and I covered this in the last video, while the volume is drying up. That is what you want to see. This is non-emotional, rational price action. This is institutions stepping up when the market's weak. This is, there's evidence building that would allow us to position in SQ again, and maybe, and we just say maybe because we don't know what's going to happen next in the markets, and just maybe we get this sort of action out of it. It's been a prior winner for us, so we always keep track of it. It's been, a prior winner in the prior uptrend. So we're familiar with the stock, and we're looking to position at this point. So at this particular point, just want to point it out, is we know a few things at this point. In this little box here, when price consolidates at its prior highs, we know a few things. The first thing that we know is the RS days that show up in over here. The second, this has been a cycle winner. So it's been a winner in the past. We know the stock, and it's a increasing funds. So two increasing funds. And then the third thing that we know is that we have a constructive dry up, right? So constructive tight action with a dry up in volume. So it's tight closes with a dry up in volume. That's what I mean over here. So given that we have these three things, we also have, solid fundamentals. That's why stocks make it to the top 10 report. Solid fundamentals. In most cases, Ross is going for that, or the names might be driven by sales. And in the odd case, he might put a biotech on there that exhibits really good price action and volume characteristics. So at this particular point, another thing that I want to cover is, if you are an all access member, this note is really for you, where it says strong pink line. So if I flip back to these are our custom daily charts. If you've not read the Pink Line Market Basics blog, after this is probably a good time. So basically, this is our correction, just to give some time frame. And we start seeing a rise in the pink line, which is a volume interpretation tool, as price, starts seeing rational action here. And then this is your prior high, and this is where it made it to the top 10 report. So the key takeaway from this particular graph is, other than some of the info that we get out of it, is there's a rise in the pink line, which is added conviction when we position into a particular stock. So flipping back to this guy, this is where we are. We also saw repeat IOF in this zone, and this is basically a traditional entry on the charts, and the reason we're not positioning in this space is because the RS line is not making a new high before price makes a new high, at least in this particular zone, at least in this zone over here, right? So we're still trying to mount evidence. We're trying to stack our evidence before we position in the name. We're not concerned about, we did not buy it at 32. We did not buy it at 42. We want to see tight constructive action on the charts that makes it easy to place, we know where we want to place our risk. So in this particular chart, it's after it acts rationally, the easy risk area is basically the 21 DMA. You could position versus this pivot of 87.25. So once we have that evidence at our back, we have an uptrending market. We see good, solid, tight action RS days, solid fundamentals, the whole story. At this point, the price I bought on this particular day where price reverses and reclaims the top 10 pivot after closing below it the prior 2 days. I happened to buy it somewhere over here, and it was on increasing volume, so that's always a positive. And then this one, it just so happens it never really looks back. Price just keeps trending and trending and trending. So the next thing that I want to cover is, managing a position in a leading stock. So once you have a winner on your hands, how do you go about managing it? In this particular case, it was a really cooperative market, and we see a relative strength or outperformance phase here. So we build a cushion right away from its 87.25 pivot. At this point, the stock never is testing its 21 DMA. We keep trending. So this is a solid trend here. There's no real reason, unless you feel portfolio pressure somewhere in this box, you can, scale a third. It's okay to scale a third. But from how I think about the markets is basically, where can I position, how long can I be in the stock? And one of the initial areas I'm looking at, as long as the stock is less than a 50% gain from the entry area, is basically that 21 DMA. And once it moves above that 50%, my mindset basically is shifting to, how long can I keep this now? And I sort of start looking at the 50 DMA in black or the 65 EMA, which would keep me in this particular trend and let me ride this winner. So from a position management point of view, so one of the first questions you want to ask if you want to be in a big winner, right, is from a risk point of view, if my 21 DMA is moving above my cost, that's a positive for me. That's my mindset. If SQ moves past 87.25 and the next day just stops me out, and I would cut that position flat, right? So it's always, how do I position myself in a bigger winner? It's not about, it's just the dollar mindset instead of the pennies mindset. At this point, my eyes are on how 21 DMA is moving up. If price is acting, rationally, tight areas, and then it keeps, it's going with the trend of the markets. We're building that cushion. The 21 DMA keeps moving up. And then at a certain point, when the 21 DMA is above that 50% mark, I sort of look at switch to the weekly with a 10-week line, or the daily with the 50/65 EMA. How I manage my positions, if I feel portfolio pressure, I usually take a third, because, if I'm doing well in a particular trade and I want to reward myself, and if I haven't taken a 1/3 on this SQ, I would take that 1/3. You could go into the exact details of this trade log. Sort of covers how I went about managing it, but I want to cover the concept itself. You could go over this and find out where I scaled out and all that. But in the case of SQ, this is as good as it gets. It works right away from your entry area. Sort of cushion, it builds that cushion that you're looking for. It rides the 21 DMA. We see some sort of turbulence in this area where the market is pulling back and SQ is pulling back, right? But it's very respective of its 50 DMA here. And then we see another trend. It comes back in. So at this point, I was a little bit I wanted it to hold the 65 EMA, and if there were at least one or two more closes, I would have scaled maybe another third here and let the rest really stop me out when the position, just breaks down, goes to the downside. But the mindset is always, how long can I stay? The trade itself is done in this area. After that, it's all about management. What is the markets doing? How is my portfolio acting? How is, SQ acting, respective of its, KMAs while it rides a trend? And the mindset after, say, a 50% gain is a little bit bigger where you zoom out and you say, you know, this is really a good winner for me. How do I stay in this particular trend and allow it to work itself to be really the super winner?